Good morning, everyone. Wish you all a very happy new year. Hope this year gets you good health and prosperity, and all of you become a more smarter market participant. Today is the first trading session of the year 2023, and I am Shuchi Rungta presenting you the morning market update. Markets had a roller coaster and increased volatility in the month of December. Technically speaking, the monthly closing on the Nifty has formed a bearish engulfing candle pattern on the monthly charts. This pattern gets activated on the break of 17,800. We studied the past performance of this pattern and the indices has corrected reasonably once this pattern gets activated. Hence, 17,800 is a crucial level to watch out for. On the weekly charts, market rebounds last week, but still we have a lower high and a lower low. Coming to the daily chart setup, we mentioned the importance of 17,800 levels as that's where the Fibonacci 50% retracements of the October rally got completed and the markets were heavily oversold last week and we saw a good bounce back of 400 to 500 points. The index on Friday has failed to cross the important 18,250 level where the moving averages lie. It touched the resistance level and that's when the bears got activated. The daily RSI still is trading below 50 and MACD in sell mode. The option chain saw significant call writing from 18,200 and 18,300 strikes. Hence, this zone will act as a tough resistance. We studied how the markets have moved in the month of January, and historically, in the last 25 years, we can say that the month of January, the markets have had great trending moves. So, what is in store for January 2023? Looking at all the overall structure, yes, that the market is at the cusp of making some trending moves. Two important levels to decide that in which direction will the trend be. 18,250 on the upside, a close above that shall confirm that yes, the fall was a bull market pullback and the bulls will gain momentum on the upside. However, the break of 17,800 will confirm that the markets have reversed and it's a sell on rise market. Looking at the broader equities, we see that the follow up buying is completely missing in most of the stocks. The structure of many stocks and sectors have been damaged. It's only the banking stocks and bank nifty and metals which currently shows strength in the market. Hence, a close watch out on the markets for a few more trading sessions and the important levels to decide the January move. The tilt is more on the bearish side looking at all evidences. Coming to the US equities, Dow Jones is consolidating and making a pattern on the daily charts just above its 200 DMA. 32,500 is a very important support level. A close above 33,500 on the index will take it higher. Nasdaq is on its lower end of the range. All the US indices trade below its short-term averages and the trend is down. US markets are closed tonight. Dollar index continues to trade lower around 103 104 zone, whereas crude oil has had a good bounce back from 70 levels. Currently is trading at 80. To conclude, it's best advised to trade and act based on what you see and not what you feel. Hence, currently keeping low in the markets and leverage is a good option. Be low on leverage too. Let the market decide where the break is coming and trend is turning. 18,250 and 17,800 are the two important key levels to decide. Levels for the day, Nifty support will be seen at 18,000 and 17,800. Resistance 18,240 and 18,400. Bank Nifty support will be seen at 42,500 and 42,100. Resistance 43,500 and 43,750. Thank you.